public policy, history, and film.
Contemporary documentary film, full colon. If it has a full colon, it's a bigger tuition.
Yep.
Filmmakers in the Full Frame Documentary Film Festival. That's a course at Duke.
At Duke, and parents pay good tuition for that.
That pays you to study duration and convexity.
But somehow she's made a good career. I don't know how she did it. Meghan Graper joins. We really appreciate her coming into our studio here. She's Global Head of Debt Capital Markets at Barclays. Meghan, thank you so much for joining us here. If I want to fund a leverage buyout in the debt capital markets, can you do that for me?
We can. In fact, I think there are signs of life in the investment grade world in particular, a market that seems reasonably unshaken relative to what we're seeing play out in other asset classes.
Yeah.
And part of this is tied to, I think, a reopening of the market. You need to see supply to beget supply. And there is confidence and cash to be deployed. And so, supply-demand imbalance, I think, helping drive that.
Let me get to the soap opera right now. And Rubenstein, Duke, there's no selling of private equity, private debt. They can cool, calm, collected. Other institutions are selling private equity now. Discuss. What's it mean from your desk?
It means a cash rotation. And so there's ample liquidity. You can see it in the order books we had this week. So we've had a functional new issue market. You saw, a Kinder Morgan deal with $17 billion of demand this week. Walmart topping $21 billion. We did a deal for the Republic of Austria in Europe, $63 billion in demand for a $7 billion transaction. So cash is gravitating to safe havens.
I hate you. She doesn't know I bought the Austrian 100-year. At the top of the market, it went down 74% at some point.
Oh, Lord.
What are your clients telling you these days, Meghan, when you talk to them, if you bring a new issue to the market? How do they feel about, are they asking for more return? Are they asking for tougher covenants? Are they concerned about just the world in general? Or is there so much money on the sidelines that they're just throwing it at your issuers?
I've yet to see an investor that would say they're bullish here. Okay. So that is the challenge. I think, ultimately there is a amount of cash coming into investors' hands that needs to be redeployed, and they are looking for safe harbors. Investment grade is proving to be that. You've got $400 billion in coupon income and the wall of COVID debt maturing. So even as we keep monitoring these Lipper data outflows, which certainly need to be scrutinized, I think they're indicative of sort of psychology of market and sentiment. There is a willingness and there is opportunity that volatility is presenting in the long end of the curve and with yields that are now, upwards of 6% without having to take a lot of credit risk.
I guess your world has kind of readjusted to, a 10-year at 4.30, that type of thing, as opposed to years, for 15 years, we had no interest rates. Have issuers and investors kind of said, okay, this is the new normal now? This is actually what a normal capital markets and the debt side looks like?
Yeah, no, it's picking and choosing your spots on the curve. So that is certainly a choice. I think for investors, the underlying yield is what's fueling the bid. So you're talking about, some of the highest all-in yields that you could achieve in the long end of the curve, upwards of 6% for a single A long piece dated debt, and triple Bs is closer to 6.3. So, but on the issuer side, they're looking at spreads. They're still at all-time tights. So we've seen a 10 basis point retracement in credit spreads this week, which just tells you that, there is money pulling in at a time where, yes, credit spreads are 25 wider on the year, but underlying rates in the front end of the curve are 40 to 50 lower. So your all-in cost of funding actually isn't materially worse than you were at the start.
You're too young, but did your dad or grandpa, did they show you the S&P Blue Book?
We were a medical family. I was standing over my dad in an OR doing cardiac surgery procedures. So finance was another world from that medical
Lisa,
background.
would you hand her a Tang mimosa? Maybe we'll get Meghan Graper through this. Meghan Graper with us here on your commute across the nation. Good morning, worldwide, and particularly to the continent of Europe in your afternoon on YouTube. Subscribe to Bloomberg Podcasts. Okay, in the equity zeitgeist right now, institutions, not Barclays, total panic. Everybody's doing this, doing that, and retail's buy the dip, keep it going. Is there the same retail institutional dichotomy in fixed income?
Well, the one thing we've been monitoring is that 22% of investment grade credit is owned by non-U.S. investors. And so the fear factor, particularly as we looked at some of the moves in the bond market, and the suggestion was that maybe we were seeing investors pare back. That's in fact not the case as we look at investment grade.
Bloomberg says that's not happening.
It's not happening. You can see it in the rate auctions. We just got the allotment data for the April auctions. So 10s and 30s actually saw a month-over-month increase in terms of foreign participation. That's true in these new issue order books as well. So we are bringing deals to market. That 22% holding is still, there's no shortage of demand from Asia, from the Middle East, and from Europe, helping to underpin some of these functional markets.
How do you compete against private credit, or how has the private credit market impacted your business?
I mean, private credit is a bit more opaque, and it does feel like more of a bespoke market. And so if you're an investor in this day and age, what's difficult in the secondary market, why everyone takes their lead from the primary, is you're in good company if you're in the new issue market. You're not a singular investor making a singular decision. A lot of private credit is actually more finite number of players helping to drive activity. If you're alongside 150 other accounts and a $20 billion order book, you're feeling more confident that at a market that's difficult to think about where is fair value, if you're alongside a multitude of other savvy investors, you're feeling greater conviction about fair value.
David from Camden Yards emails in. I'm kidding, folks. But if you were to talk to Mr. Rubenstein right now, are the endowments too locked up in alternative investments, esoteric alternatives? Should they be looking at the joyous liquidity of Meghan Graper at Barclays?
I think we're seeing that rotation happen. So if you're looking for safe haven trades, particularly in the front end of the curve, it's an easy place to find a cash surrogate and wait for more sustained stability. Because even if there's incremental deal making out there, the risk is that this growth landscape is going to contract, particularly as we move into the second half. So it's a good place to sort of park cash and wait things out, and still, without taking much credit risk, pick up incremental yield.
The movie of my childhood was David Lean, Lawrence of Arabia. I mean, it was jaw-dropping as a kid. What was the movie of your childhood that made you do film at Duke?
Well, I started out as a documentary filmmaker, and so it was really more evaluating and critiquing different personality types, which is actually somewhat apropos as you think about trying to evaluate different investors and issuers and how they're approaching markets.
Did you see Z, the Greek movie?
I have not seen that. What is that?
The Z, it won every Academy Award. Like 1970, 71, it was this incredibly, it was before documentary, it's this incredibly violent movie about one of the Greek revolutions.
All right, I'm
Check
on it.
Out. Very cool. Z, just the letter Z.
That's like a John Tucker reference, Lisa. And it comes out of nowhere.
Something to watch on an international flight.
Yes. Are you based in New York, or does Barclays have you with a British accent in London?
No, I'm based in New York, but I'm all over the globe. I was in Texas yesterday. I'm flying to Switzerland on Sunday.
What'd you learn in Texas? What'd you learn in... You talked to Michael. They're going to move the New York Stock Exchange to Texas.
Well, there's a decent amount of conviction that there's sort of ample opportunities for high quality names where fundamentals are in good shape, and where they have access to markets. So it's a tale of two cities. There's definitely issuers that are cash rich and happy to sit this out for a period of time. Some of our pipeline has moved to late Q2, Q3. Okay. There are others though. There's a $35 billion backlog slated for next week. So we're going to build on the momentum we saw this week with $25 billion getting done. $25 billion getting done at new issue concessions that are 3 basis points, with oversubscriptions that are upwards of 5 times.
Meghan, thank you. Awesome. Meghan Graper with Barclays, driving all their credit market work.